Governor Brown is slamming the president's tax plan and California Republicans who back it. The governor described California congresspeople who are Republicans as a herd of sheep who follow the president's wishes. All 14 Republican House members voted yes on the budget, and that budget allows for a huge deficit to finance tax cuts. Among the cuts proposed are state and local tax deductions that many Californians used. So we asked CBS News political editor John Dickerson about the chances that state and local tax deductions would be eliminated.
Well, there seems to be some pushback within Republican ranks for against getting rid of the state and local deduction. And the problem is, of course, they can't do the tax cut unless they get the money that would come from removing that deduction. But this is the fuzziest of, I mean, when basically all there is so far is a framework of ideas. And this is one of the ones that's under contention.
Now, we'll have more on the tax reform issue on Face the Nation right after this newscast.
Joining us now to talk about the new budget and these deductions and what it means for us, because actually that is the biggest question we always have. How does it affect me? Congressman Mark DeSaulnier from Concord. Can you briefly explain what these deductions are and how they play when we come to pay our federal taxes?
Sure. So property tax in a very high cost housing situation, California, New York, Illinois, New Jersey. You can't write those off anymore, so now you can. So that's three.
You can do property mortgage interest payments, but not property tax.
Right. So this would take away the property tax deduction, take away the vehicle license fee, your car registration, your income tax. So for Californians, it's a huge hit.
Okay, when you put it all together, so it would be your tax bill, not only what you pay in taxes, but also those bonds and special district taxes that we've added on so heavily in the Bay Area.
So our ability to go ahead and spend for infrastructure, because the federal government won't, you can write some of that off now. You won't be able to in the future. It's an attack on the high-cost areas.
Okay, let's take a look at some of the numbers that we're talking about here and how it varies. Let's say in Solano County, it could be $10,000, but in other counties like yours, it would be $20,000. In San Francisco, $35,000, and in San Mateo, $39,000 could be what people wind up having to pay extra in federal taxes?
Yes. So that property tax deduction you take, which is the biggest part of your income tax on your federal tax, you won't be able to do that. It's disallowed.
Okay, how did we become so disproportionately hit by this, us in New York and New Jersey, as opposed to Oregon, right next door, Nevada, Arizona?
In Illinois. So it's all where the big metropolitan areas are. It's where the economy is driving, the areas that drive the U.S. economy right now. San Francisco, Los Angeles, Chicago, New York, metropolitan areas, urban areas in New Jersey. So those are the places that have high costs. Young people already can't buy houses in these areas. They're going to be.
But those are also areas where the state legislature and the locals have said for years, we can pass this tax and we can pass that tax, but don't worry about it because you can take it off your federal forms, right? So we sort of played into this.
No,
we dug our own hole.
You're right, but we allowed that to happen at the federal and state level because they were high-cost areas. So the state of California is the 4th largest donor state into the federal government. We put in more than we get out. We have for decades. So all of these things have to be taken into consideration. That's why this tax plan and the budget is so crazy, because you're not talking about all these consequences because they're afraid to talk about it.
Well, no, they're kind of open about it. And some of the political equation is every state you name there is what they call a blue state. No, it voted Democrat. It has Democratic people in it. And if you're sitting in Washington and you're from Montana and say, hey, why should we subsidize California and these other areas?
Well, that's why the 14 Republicans in California who voted for it in the budget plan should think about that, because they're raising taxes for their constituents.
Now, I see that there are already sort of rumblings in Washington among Republicans about possibly pulling back on this. What's your take on that?
They're doing the calculations. They're trying to figure out what the votes are for their tax cut, which will be a huge tax cut. It will increase the federal deficit by $2 billion in the next 10 years. It will allow people who make over $1 million to get a $200,000 tax cut. So they've got to figure out how much their deficit hawks, if they're already left, will allow for a larger deficit if they take this out.
On the state level and the local level, if these deductions go, then local and state tax people will have to readjust their spending because they're going to have a whole bunch of angry constituents saying, I can't afford any new taxes. I don't want any more stuff. California is going to be hurting on that front.
Well, yeah. I mean, but California, one of the problems with our tax system is we rely on a very high capital gains tax because we've got a lot of wealthy people here. But again, it's expensive to live here.
So it's expensive to live here, and it's going to be even more expensive.
It's going to be worse.
So people could be moving out of the state?
They could. Some people could. But I think the biggest impact will be the housing costs now, and the inability for people to buy houses will get worse significantly.
Now, let me just ask the craziest hypothetical. If we can't deduct these taxes anymore, what are the chances of Sacramento, you were in Sacramento, reducing those taxes?
Well, it's all in Prop 13. So they're going to have to look at their tax code depending on how people respond. My hope is that the rumors we hear, just the mere numbers, I don't know how they get the votes in Congress, the Republicans, to do this. Because Peter King, one of the leaders in the Republican caucus from upstate New York, he said he's a no. So I think that's their problem right now. And then they do this, which is my preference, and they add to the deficit. Now, these are people who have been screaming about the deficit, the federal debt, for years, but they're going to add to it. So that people who make $1 million a year can get $200,000 in tax deductions.
Yeah, especially if they live in Florida,
yeah,
which is a key swing state.
This is political winners and losers in the map. It's not about America.
Oh, which category are we in?
We're in the loser category because we lost the election.
There we go, and that's Political Math 101.
Right.
Congressman DeSaulnier, I want to thank you for joining us.